Hello traders, and welcome back to our Babypips course. For today we are on course 9 of 11, undergraduate junior, and we have concluded course outline 9.1, developing your own trading plan, 9.2, which type of trader are you, and today we're going to continue from 9.3, create your own trading system. So let's dive right into 9.3. Here are the subtopics under 9.3. The very first one says how to create a mechanical trading system, design your trading system in 6 steps, build your trading system in 3 steps, what time frame should you trade, so it's easy ridiculous trading system, and then summary, creating your own mechanical trading system. So let's dive right into 9.3.1, which is how to create a mechanical trading system. So with that, let's go into it. Before we do, let's roll the intro, buddy. So here we are on how to create a mechanical trading system. So what are we going to learn here? So Babypips is saying so far we've discussed a lot about how to discover yourself as a trader, and now that you've discovered yourself as a trader, it is now time for us. Okay, let's do this together. Okay, so it's now time for them to teach us how we can be able to design a trading plan by creating a forex trading system. So what is a mechanical trading system? A mechanical trading system is a trading system which we generate to trade signals, okay, as a forex trader. So in theory, the system should eliminate all biases and emotions in trading, because you are supposed to follow the rules of your trading system no matter what happens. So there is no holy grail over there or anywhere else. Okay, there are people who tell you they have lots good forex trading systems that they have been making money with, okay, and they're making tons of money with it, okay, and they are selling it. So Babypips is saying before you hand out 3k to somebody, okay, to buy a trading system, that you can actually develop your own trading system, okay, and use that 3k to fund your account. So that is all they are saying here. So let's now go further, okay, to see goals of your mechanical trading system. Now your mechanical trading system should contain 2 basic things. 1, your system should be able to identify trends as early as possible. 2, your system should be able to avoid you from getting whipsawed, okay. But it is really true that there is no trader out there who doesn't get whipsawed, okay. So that's the difficult thing about forex trading. There's no way you can see you never take a loss. So that's basically all this all Babypips is saying here, okay. I don't think we should read all about it. That's just the point, okay. But the most important thing to remember is that you can actually develop your own trading system that will be profitable to you, and to be successful with it is just for you to stick with it, okay. Stick with it, be disciplined. Remember we'll talk about rock solid discipline. Be so disciplined once you have developed your own trading system. Whereas there are also many forex traders who are in the community of Babypips who have developed several trading systems, and if you want to take a look, okay, you can head over to click this link. Yeah, so I was saying there are many traders on forum on the community of Babypips who have developed different systems. So you can actually find any of the systems if you wish to, and stick with it, or better say you can create your own system. So let's move to the next section that says design your trading system in six steps. Okay, so design your trading system in 6 steps. Now the main focus of this guide is to help you to process help you through the process of designing your own forex trading system. Okay, so how are you going to go about it? The very first one is time frame. so write it down. Okay, the very first thing you need to do is decide your time frame. What time frame are you gonna trade on? Is it the 1 minute, 5 minutes, 15, 30, 1 hour, 4 hour, daily, weekly, or monthly? Okay, so decide your time frame. Then secondly, find indicators that help identify a new trend. And there are indicators that do that. According to Babypips, what we are learning here, the moving averages indicators are the best indicators that help us identify when the trend is about to begin. Okay, so you use the 10 simple moving average and the 20 simple moving average. For the 10 is the blue line, for the 20 is the orange or yellow line. Any color you wish to make it is up to you. Okay, and so how does it work? How do you use it? The 10 is the quicker one, while the 20 is the one that is slow. So once they cross, okay, if the blue line crosses over to the downside of the orange, you know it's a downtrend. Okay, when the blue line crosses to the top, you know it's moving. Okay, so it helps you to be able to spot trends when they're about to occur. When they're about to pick up. Okay, then the third step is to find indicators that help to confirm the trend. Okay, so what other indicators can you use to help to confirm the trend? Is the relative strength index and the moving average convergence divergence. Okay, so the RSI and the MACD, and we always know there's a configuration to the RSI and the MACD. So for the RSI, I think the RSI is default. Okay, but the MACD is 14.33. They coded it, I think so. We're going to find it out very soon. Okay, so then the next step is to define your risk. Before you even think of how much you're going to make, think of how much you are willing to lose to that particular trade before you click buy or sell. Okay, and we are going to learn more about this and money management later in later lesson. The next step is to define entries and exits. Okay, so you have to figure out when you're going to enter into the market and when you are going to exit the market. Is it when the candles, the indicators, they cross over, you enter, or you are going to wait for the particular candle in the higher time frame to close before you enter into the market? One example Babypips is giving us here is that they have a very good trader who is called Pips Forex, and he believes that it's best to wait until a candle closes before entering into a particular trade. Okay, even though he's using all these indicators, according to him, he has been in situations whereby he will be in a trade, okay, in the middle of a candle, and all the indicators are match up. Okay, the candle has not closed, but all the indicators they match up. Now he only finds out that by the time he enters into the market, by the time the candle closes, the trade has totally reversed on him. Okay, so for that reason, Pips Forex is saying he prefers to wait for candle closing before he enters the trade. Will that be the same for you, or you will not prefer to wait? Anyone? Okay, it's up to you now. Okay, it's decision time. It's up to you. So now Babypips giving us examples of trades, entry and exit. Okay, and so these are just examples of trade, entry and exit. Good exit positions is to trade your stop loss, like when you are in profit, hold on. So I paused the video because I wanted to bring out this tool. So truly your stop loss, for instance, say the price is making lower lows, lower highs, lower lows, lower highs, like that, right? And let's assume that you entered the market somewhere here. Okay, so truly your stop loss and your stop loss is here. Okay, by the time prices moves to the downside up to this area here, you can move your stop loss from here, you move it down to this point here. Okay, or even here. Okay, because you don't know when this pullback will occur. Now, so suppose you don't move your stop loss, you wait for this to the downside and pull back up, then this way again you can move your stop loss from here to this place. Okay, and just like that, that's just trillion of stop loss. Okay, trade your this is your here. Oh my goodness, what am I saying? This is your entry, this is your stop loss, and once price starts going down, you just keep adjusting your stop loss to the downside in proportion to the movement of the trade. Okay, so that's that with that. And in this case, this is how it was. You see, price was here, this was the entry, Okay, price move down to this point. Okay, this is this take profit, and since price is here, you trade the stop loss and move stop loss from up to this region. Okay, giving price enough room to breathe, probably to come up a little bit before going down. Now I'm saying all this quickly. Okay, it's different when you are trading the live market. Okay, seeing you in profits and then seeing all the profit being taken up, you know, it will work on your emotion, your psychological thoughts and everything. Plus, if you have been sitting on the trade, okay, for a very long time, it's going to have effect on you. So you have to decide if that is something you are comfortable doing, or the moment the price moves down, you just, you know, moves down, you just close your trade, take profit, rather than letting prices come against you up again, and maybe you're not saying, oh, it has come up again almost to my entry, let me close. At the moment you close the trade here, you find out that the trade starts going down again. You're like, oh my goodness, why did I close my trade? Okay, so you have to understand that those are some of the things that you're going to experience while you are trading. Now, the sixth step is to write down your system rules and follow it. Rock solid discipline. Rock solid discipline. Discipline is one of the most important characteristics a trader must have. So you must always remember to stick to your system. Always remember to stick to your system. Okay, no system will ever work for you if you don't stick with it. It will not work. You must stick with it. So how to test your system, your forex trading system? The fastest way to test your forex trading is to find a charting software, a package that can enable you to go back in time and also go forward in time in the chart. Okay, so but there's a way you can do it on you can't actually do it on what is it called, on MT4, because there's a software. I think the software is cost $100 to purchase it, but you can do it on TradingView. TradingView, you can do it manually. TradingView costs $15 per month, unless you want to go for the lifetime of, like, it's almost $1,000 for lifetime, but $15 per month, that's what TradingView costs. And so there's a way you can do that manually on TradingView. To do it manually on TradingView, let me just show you. Okay, so let's say let's pick a random pair USD card. Okay, let's pick a random pair. I will now take out all these indicators and just hide them. Okay, so we don't see anything that's happening, that's coming up. Let's go to the daily chart, for instance. Okay, so let's go back in time. And now this is between you and you. Okay, so what can we see? Let me arrange this here. So we are pretend we haven't seen what has gone to the right, to the top side. Okay, now, so you are now here. This is your we have your buy and your sell here for TradingView. This is going long, this is going short. Okay, so now what is your bias in this market? See, with this huge push, okay, to the downside, okay, what is your bias? How many pips is this one? Let's look. How many pips is this? This is roughly 7817. That is about 700 pips or so, if not more than 700 pips. So what is your bias? Okay, so you're now looking at what you now do once you are here in this corner like this, just press your right arrow, your right arrow key, okay, in your key on your laptop or your computer, your keyboard, whatever. So once you depress, you see price is coming up. You're looking at the charts. This is daily anyway, daily time frame, not 4-hour time frame, daily time frame. You're looking, and then you see the next one. You see the next one. You are back testing. You want to take a trade, okay? And you see price is kind of moving sideways to you. Okay, it's coming down again. Now it has pushed all the way down. Okay, like created a lower high and now it created a lower low. Okay, now you still come up again. You see it's now coming back up, creating an indecision candle, pushing up again. Okay, and you're still looking at the market. I don't know where it went, but if I'm to take a trade, okay, actually I'll be anticipating like 50% to the top side of this push. Okay, so because let's for sake of demo, okay, let's just do this. I will not actually take a trade like this, okay, but let me see how many pips is this. it's about 190 something or so. 100 is 10 pips. 100 is 10 pips. 1000 is 100. Okay. So let's say I'm targeting, okay, 50% push to the top side. So here price is going up, coming down. Oh, we lost this trade. Okay, so we lost this trade. This is just a manual. No, sorry, we lost this trade. We lost this trade. 100. It was a loss, not a win. So we'll make it like this. Okay, so we lost this trade. Okay, so let's keep going. Price is ranging. Now price broke above. Okay, so now I now know all this area, all these levels have been taken out of the market. Okay, so I know I'm trying to pick an arrow. All these parts, all these levels here haven't closed, so I'm very sure right now that price is going to move up, but we don't buy in a push phase, we buy in an exhaustion phase. Okay, price is consolidating, it has come back down. I'm going to enter this trade again. I'm going to go for long. I'm going to put my entry here. I'm going to put my stop loss somewhere here. Okay, meanwhile we've lost this first one. Okay, so we're going to use the second one to watch if price is going to go in that direction. So let's see what happens next. Price is now moving up. Oh my goodness. Okay, no, we're still in the trade. The first one is the one that is showing there. We're still in the trade. We haven't lost the trade yet. Let's see, price is going back up again, going back down. Oh my goodness, going back up. Okay, we are safe. We didn't lose this trade this time. This much our stop loss. Price is going up, going back down. Oosh, that's so close. Oh my goodness. Okay, going back up, down. Okay, we haven't been able to hit take profit yet, so adjust this way a little bit. I think this is where we are. So we are not seeing anything, but you're doing back testing now. So let's see if our entry was good, if we win this trade or not. Yeah, we won this trade. So that's how you back test. Okay. Oh my goodness, that's how you back test. Okay, I was only anticipating a 50% movement to the top. I mean, of this huge move to the downside. Okay, so remember the first entry we took, we lost it. Okay, and now we took another entry again. But remember, okay, I just did this, or we just did this in an expanse of like say a minute. Okay, but this is a daily time frame. Each candle occurs 24 hours. It takes 24 hours for this candle to get filled. 24 hours. So we might be sitting in this trade for if we did take this trade, we might be sitting here, or we might be in this trade for like how many days? How many candles is this? Let me count these candles. Okay, where did it start? We took it from here, right? This is how many candles? Oh my goodness, 70 days. 70 days before we smash take profit. 70 days is like, it's like 62 months, 2 months and a week plus before we hit take profit. Okay, that's a lot. But yeah, so that is how you can use TradingView to do back testing. Okay, this is the way you can use to do back testing. So let's go back to our course. We came here because he said we should find a way to do back testing. Okay, so I think that's all for this session. Next, we are going to consider how to build your trading system in 3 steps. So here we are on build your trading system in 3 steps. Okay, so what are the 3 steps involved in building our trading steps? So this system is a moving average crossover system, which uses moving averages to determine whether to go long or short. Additionally, technical indicators are also used for confirmation before entering the trade. So you're basically going to learn the various technical indicators to establish specific crystal clear entry and exit points. So let's go. The very first step is define your time frame. Secondly, determine your entry triggers. thirdly, determine your exit trigger. So the trading setups involves one, your daily charts, okay, daily chart, daily time frame, and somebody who is trading a daily time frame is considered a swing trader, because you want to be catching swings, okay. And then nextly, you want to apply the 5 simple moving average to the close, and also 10 moving average apply to the close as well. And then you want to throw up the stochastic indicator, and then the relative strength index indicator as well. Then the trading rules for using this trading system, because here is the trading system, okay, this is the trading system, okay. So the rules for using this trading system on a daily time frame, remember, on a daily time frame, okay. So what are the rules? The entry rules is this: you go long if the 5 simple moving averages, okay, simple moving average crosses above the 10 moving average, and both the stochastic lines are heading up. Do not enter if the stochastic lines are heading in the overbought region, and you go long if the RSI is greater than 50. You are going to go short if the 5 simple moving average crosses below the 10 simple moving average, and both the stochastic lines are heading down. And do not enter if the stochastic lines are already in oversold territory, and they are going to enter if the relative strength index is less than 50. Then the exit rule is this: exit the trade when the 5 simple moving average crosses the 10 simple moving average in the opposite direction of your trade, or if the RSI crosses back to 50. Exit when the trade hits stop loss of 100 pips. So this is the trading rules. Now there's something I want to say about this trading rule, okay. I don't think it's bad. In fact, I think for a professional standard company like Babypips, who can teach you how to trade the market and have been able to put up a course like this, okay, from course 1 to course 11 of how to trade forex markets, taking you through every step. If they should, okay, having gone through lots of research, come up with a trading system like this, I believe you should be able to adopt this, okay, before beginning, and then try to back test it, okay. Like all that has been stated here now, you can open the demo account with any company, with Xness or whoever account you want to open with, okay. And look at the daily chart, throw up all these indicators, all of them into the chart, and back test, or even forward test. Like, just don't even go backward, go forward and say, this is what I want to do, okay. Put $100, I mean, let's say $100 or $200 in your account, and just trade with it. Once you see all these rules come into play, okay, take a trade and see how it plays out. Do it for 2 months, okay, or 3 months. Then once you are sure that it is working out for you, then you go put money in your life account and go ahead. So I just want to say, well, this trading system is great. You can use it, anybody can use it, okay. So that's all. So that's it about this trading system. Now they say, remember, a trading system is only effective if it is followed, okay. So just follow it. Now the next lesson we're going to consider is, what time frame should you trade? So here we are on what time frame should you trade, okay. So basically it's saying that for new traders, many of new traders want to trade the lower time frames and actually catch some pips and then get out, for in a very short period of time. But doing that is going to hurt you or hurt your account. The new trader, there's what they call the new trader's trap, and the trap is this: the smaller your trading account, the smaller the time frame you should trade, and then the smaller the time frame, the more difficult it is to trade. So this is the trader's trap. Okay, you come to the market, you don't have enough money in your account balance, and then you go to the smaller time frame, and because it's very, very fast, you get caught up inside and out of trades. Don't do this. Okay, even if you have a smaller account, you can use the daily time frame. That system that Babypips puts together, we just talked about. You can use that system with even with your small account, and backtest it on your backtest or forward test it on your daily time frame. Okay, swing trade with it. Okay, it will be very good for you. So new traders start trading with 1 minute or 5 minute charts. It helps us scalp the market in very quick pips, and by doing so, they suddenly put themselves in a very difficult spot, because trading a very difficult time frame when they are least experienced. So what I'm saying is that the smaller time frame, 1 minute to 5 minutes, is a very, very difficult time frame, and it comes with experience to be able to navigate that time frame. Okay, so yeah, just be more experienced before you go down to that time frame. Should you scalp? Well, scalping is generally expected. Expected of anybody who trades. Okay, but it's up to you if you want to scalp. But I don't think it's unless you get the hang of it. So as I was saying with scalping, before I got a call, it is expected that you are trading from a small time frame, probably 5 minutes or 1 minute. There are some people who trade just 1 minute. I know somebody who can trade any time frame. Okay, because it will tell you the market trends on every time frame, and that's true. And so yeah, starting out, stay away from the lower time frames, from like 1 minute to 5 minutes. Start with 4 hours or 1 hour. Okay, 1 hour 30 minutes or 1 hour 15 minutes. Okay, do your stop analysis, come down to your entries for the lower time frames. Okay, so that is basically that all this is saying transaction spread. Like it's saying, if you're trading the smaller time frame, you're paying way more than when you're trading the higher time frame, because of the spread, and suppose a trade goes against you and things like that. So nothing basically serious here that Babypips is saying. A single pip slippage is hardly noticed when you are holding a trade for several days, and that's true, with an average profit of $100 per trade. However, on a scalping system, a single pip is the difference between life and death, and that's true. So it's basically what I just said. Okay, the difference of trading in smaller time frame and higher time frame, and how much it will cost you. Okay, if you're in a longer time frame, it will be no big deal when a slippage affects you, but once you are trading a smaller time frame, it will definitely affect your account, because you're risking more, and it's a very tight trade margin, so to say. So let's move to the next lesson that says, so it's easy, ridiculous. Okay, so the so easy it's ridiculous trading system. So what is this about? So is it really easy to trade this system? We use simple moving average to help us identify a new trend as early as possible, right? So yeah, keep trading easy. Then the next thing is to use the stochastic to help us to determine if it's still okay for us to enter the trade after a moving average crossover, and if it also helps us to avoid the it also helps us to avoid the oversold and overbought regions. Okay, then the RSI is an extra confirmation tool that helps us to determine the strength of our trend. Okay, so for this system, we will be risking 100 pips on every trade. 100 pips on every trade. Wow, 100 pips on every trade. 100 pips on every trade on the daily time frame. Okay, that's a lot. 100 pips is a lot. Like I was thinking, it's a lot. Okay, so let's take this trade example. Trade example buy EU. So now the price of the market has been ranging, and then all of a sudden there is a crossover of the RSI. I mean, yeah, the SMA is simple moving average. Here there's a crossover. The 5 moving average crossed over the 10 moving average. The 5 moving average is helping us to know if the trend is changing, and how fast it's changing. Okay, so it's crossed over here, and that's a buy signal. Now the stochastic is helping us to know if it is okay to buy, to go buy. Now the stochastic is showing upward momentum, not yet in an overbought region. Okay, so it is showing upward momentum. Look at it here. I hope you can see my arrows. Upward momentum in this area here where it crossed, and then the relative strength index, the RSI, okay, is just above the 50. So all the indicators are pointing to buy. Okay, so assume you bought this trade. Okay, if we went ahead, if we went back in time and looked at the chart, we'll see that according to our trading rules, this would be a good time to go long. To backtest, you will write down at what price you would have entered, your stop loss, and your exit strategy. Then you move the chart one candle at a time to see how the trade unfolds. Okay, so now this is the entry here and everything, and then we entered the trade. We bought higher high, higher low, higher high, higher low, a new higher high, and then over here the lines crossed again, the MAs crossed again. This time the fast one, the simple moving average of 5, crossed below the slow moving average of 10, which is the blue line, and that's an exit strategy to close trade. So riding all this swing to the top side, remember this is a daily time frame. Okay, so if we enter the trade here, how many candles is this? 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 21 to almost a month. This movement, okay, for you take profit here is almost a month, and that's significant amount of pips, okay, you would have banked to yourself. So now that would have been very, very profitable. So you can see that the moving averages crossed in the opposite direction. It was time to exit at this area here. Now trade example 2, sell. So is it so easy? It's an easy ridiculous system according to what Babypips is saying. It's time to sell. So what is the trading criteria? What do we have to do? What do we look for? We look for the candles to, the EMAs, the SMAs rather, to close again. The fast moving SMA, which is the red, when it goes below the slow moving SMA of 10, which is the blue line, that's indication for us to sell. Okay, so let's say you sold here, we'll have to confirm if it's pointing downward. The stochastic shows that yes, it is, and it's not in the oversold region yet. And then the relative strength index just told us that yes, the price has just below the 50. It has not gone to oversold. It's not in the overbought region yet. Oversold region rather. Sorry. So it's a go entry for us. Okay, so we'll enter the trade. At this point, we'll be short. Okay, so once the short was entered, everything pointed directly to the downside. What happened? You notice that price did short in this area here. Okay, and price slumped all the way down, and at this point the SMAs, simple moving averages, again crossed at this area again, and that's an exit strategy. We are about to exit. We should exit the trade, and from this trade you would have gotten about 800 pips. Stay in this trade for like a month, you'd have gotten 800 pips. So if you got 800 pips and you are risking, let's say, $10 per pip, if you are going to risk $10 per pip, okay, that should mean you have like $1,000 in your account, or at least $500 in your account. So 10 times 100 pips, that's how much? 1,000. No, you can't risk $10 per pip. You can't risk $10 per pip. You can risk like $3 per pips or $5 per pip. So $3 times 100 that will be 300 pips. Okay, so your risk will be 300. Okay, if you times 100 pips, that's 300. So 300 you will be your stop loss. If the account goes against you, you will lose $300 because you are risking 300 pips. So for you to risk 300 pips, you must at least have at least $8,000 in your account, or way more than $8,000 in your account. Let's say like $5,000 in your account. If not, you might want to risk just $1 per pip. Okay, so it's the same thing. So if you're risking 300 and you want this trade 800 pips, so that's 3 times 800. Okay, 3 times 800, and that will give you like $2,400. Okay, after a month. That's a good trade. So yeah, it's a win-win. Okay, it's a win-win. So is it that just simple? Is it just simple? That's why they tagged this subheading, the so easy it's ridiculous trading system. So easy ridiculous trading system. Okay, it's so simple. And there's an adage that goes with forex trading. It's called KISS. KISS means keep it simple, stupid. Okay, just keep it as simple as that. Okay, and bank all the dollars into your account. You must always stick to your trading rules. Okay, your trading system rules. It's very important. Backtest this, forward test this in your demo account for at least 2 months to be confident of it, and then go live. Okay, trust your system and trust yourself. Okay, so let's go with the next lesson that says summary: creating your own mechanical trading system. So by creating your own mechanical trading system, this is just a summary of everything we'll be discussing in 9.3. Okay, the first thing to be able to do is to be able to identify a trend as early as possible. Then 2, be able to find ways to avoid whipsaws. That is by confirming your trend. Okay, now once you have traded your system for at least 2 months and you are still profitable, then you are able to go live with your real money. Now there are 6 steps to developing your own mechanical forex trading system. The very first one is find your time frame. Secondly, find indicators to help you identify trends early. Then thirdly, find indicators to help you avoid whipsaws and confirm your trend. Fourthly, define your risk. Fifth, define your entry and exit. Sixth, write your forex trading system rules down and always stick to those rules. Okay, then there are also 3 phases to testing your system. The first phase, go back in time and move your chart forward 1 candle at a time, the way we did when we backtested with TradingView. Okay, I showed you. Then trade the system according to your rules and record your trades to see if it ends up being profitable. It's called backtesting. Second phase is, if it is profitable, then you trade. You want to go to your system. You want to trade a demo account for at least 2 months. That is after you are done backtesting. Once you are done backtesting, trade for demo for like 2 months. Then third day, once you have traded your demo for like 2 months, okay, and you are still profitable, then you are ready to go live with real money. So that's just it. And this is just a disclaimer. Okay, our legal stuff, our lawyers asked us to add this. Hypothetically, performance results have many inherent limitations. Blah 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 blah. This is not the trading advice and all that. Just a disclaimer. Okay, so let's go to the next lesson that says why you need a forex trading journal. I think that's lesson 9.4. Yes, why that's 9.4. So that's all for 9.3. Please share this video, subscribe if you haven't, and until next time, take care. Oh no, let me go with the normal rhyme. Smash the like button, subscribe if you haven't, and until next time, I'll see you in the next video.